It's Friday evening, March 6, 2026, and it's time for our monthly update. We're going to dive into how our QQQ and QLD investments have performed and take a closer look at what's been happening in the markets. The market's journey since April 7, 2025 has been nothing short of remarkable. Over the past 11 months, QQQ has delivered an incredible bullish run, surging from $402 on April 7, 2025, to $599 today. We even witnessed QQQ touch $637 on October 29, 2025. The period from May 1 to November 13 was particularly strong, with QQQ staying above the SMA 50 purple line for 7 straight months. However, the landscape shifted after November 14, 2025. QQQ has now dipped below the SMA 50 purple line 5 times, once in November, again in December 2025, a third time in early January, 4th in mid-January, and 5th in February 2026. The pattern from November to January showed QQQ quickly reclaiming this support level within just several days each time. Today, QQQ sits at $599, positioned significantly below the SMA 50 purple line. Looking at this QQQ daily chart from Finviz, we can see QQQ has been unable to penetrate above the multiple top resistance line. The breakout attempts have failed repeatedly, first in early December, second in late December, third in early January, and finally in late January. Following these failures, QQQ cascaded below the SMA 20 line, then the SMA 50 line, and today broke below this blue support line again. Currently, QQQ is trading between this blue support line and the SMA 200 line. The critical question is whether QQQ can find solid support and bounce from at least the SMA 200 line. While the recent drawdown looks like a significant correction on these daily charts, the weekly view tells a different story. QQQ is actually still performing quite well when you zoom out. Since April 2023, QQQ has remained above the SMA 200 green line continuously. Even more impressive, QQQ has stayed above the SMA 20 black line most of the time since April 2023, with a consistent pattern of dipping below it only once per year. Think about this. QQQ went below the SMA 20 black line just once in 2023, once in 2024, and once in 2025. Each time presented a fantastic buying opportunity for QQQ, QLD, and TQQQ. In 2026, our early buying window appeared in February and March. As you can see on this chart, QQQ is currently below the SMA 20 black line. The big unknown is how long this once-a-year opportunity will last. History gives us some clues. In 2023, QQQ rebounded between the SMA 20 black line and the SMA 50 purple line in just 1 to 2 weeks. In 2024, QQQ bounced right above the SMA 50 purple line within 1 week. In 2025, QQQ dropped below the SMA 50 purple line but managed to recover between the SMA 50 purple line and the SMA 200 green line over 9 weeks. Now we're watching to see if QQQ can rebound above the SMA 50 purple line soon or if it will take longer this time. Now let's discuss what happened in the markets this week. The US stock market wrapped up a highly volatile week ending March 6, 2026, as investors dealt with what analysts are calling a 1-2 punch of geopolitical instability and disappointing economic data. Major indices finished the week in the red, driven primarily by escalating conflict involving Iran and Israel. This geopolitical crisis sent West Texas Intermediate crude oil surging 12% on Friday alone, settling above $90 per barrel. The oil spike followed reports of a maritime standstill in the Strait of Hormuz and hawkish rhetoric from the White House, sparking serious fears of a global energy shock. Despite domestic losses, U.S. markets actually outperformed international peers in Europe and Asia. Investors are viewing the American economy's relative energy independence as a safe haven amid broader global turmoil. Adding to the geopolitical anxiety was a shockingly weak February jobs report. The data revealed the U.S. economy unexpectedly shed 92,000 jobs while the unemployment rate climbed to 4.4%. This combination of a cooling labor market and rising energy costs has reignited fears of stagflation, seriously complicating the Federal Reserve's path forward on interest rate cuts. High-growth sectors like semiconductors face pressure from new AI export regulations, though some bright spots emerged. Companies like Broadcom and Marvell Technology posted strong earnings that bucked the broader trend. Ultimately, the week closed with a defensive tone as traders retreated to cash and commodities, nervous about how the dual threats of Middle Eastern conflict and domestic economic softening will play out in coming weeks. Let's look at our ETF comparison. QQQ stands at $599, which is 11% above the previous all-time high of $540 from February 19, 2025. QLD, the 2x leveraged version, is priced around $66, representing a 10% increase from its peak of $60 in December 2024. TQQQ, the 3x leveraged version, trades around $47, just 1% above its peak of $46.90 in December 2024. This comparison shows TQQQ has delivered the worst percentage return from peak to peak. However, my actual stock portfolio tells the opposite story. My personal portfolio shows QQQ with about 22% return, QLD with 32%, and TQQQ leading with 54%. Why the massive difference? Because you could purchase TQQQ at dramatically cheaper prices during the downturn. For example, on April 7, 2025, TQQQ traded at just $17.50, a massive 63% discount from today's $47. Meanwhile, QQQ was at $402, only a 33% discount from today's $599. That price differential is what generates outsized returns. Now for our QQQ versus QLD $100 challenge portfolio update. Starting this month, I'm making an important change for QQQ. We'll be buying QQQM instead of QQQ because QQQM has lower fees. We're also shifting to a Roth IRA account to eliminate capital gains tax. On February 6, when QQQM dipped, I added 0.40 shares at $247.95. Combined with our previous QQQ and new QQQM positions, we've invested a total of $4,800. Our current unrealized gain is approximately $1,050, delivering a 22% return. For QLD, I'm also making a strategic shift this month. We'll now be purchasing QLD through a Roth IRA account to save on capital gains tax. On February 6, right after buying QQQM, I picked up 1.489 shares of QLD at $67.15. Combining QLD shares in both the Roth IRA and individual accounts, we've invested a total of $4,800. The results are even more impressive. Our unrealized gain now stands at about $1,520, giving us a solid 32% return. The performance gap between QLD and QQQ continues to widen in rising markets. These results demonstrate the power of QLD's leveraged structure. It's engineered to deliver 2 times the daily performance of the Nasdaq 100. Yes, leverage amplifies volatility, but it also delivers significantly greater upside potential when markets recover and trend higher. Since May 2024, we've maintained an unwavering commitment of investing at least $100 into QQQ and $100 into QLD every single month. This consistent, disciplined approach embodies dollar cost averaging, or DCA. The goal is straightforward: reduce the impact of short-term market swings by spreading our investments over time. We accumulate more shares when prices are low and fewer shares when prices are high, all while maintaining our focus on the long-term objective. Our strategy rests on 4 fundamental rules. First, invest monthly without fail. Second, hold long-term for 30+ years. Third, never sell regardless of market conditions. Fourth, never, ever use dangerous margin. This approach is designed to succeed over decades and completely removes emotion from the equation. If you want to see 30 years of data proving this methodology works, check out my deep dive video Cash vs SPY vs QQQ vs QLD vs TQQQ, 30-year showdown. That wraps up our March 2026 update. Despite market volatility and geopolitical uncertainty, the strategy continues working and the results speak for themselves. If you got value from this video, smash that like button, subscribe so you don't miss next month's update, and let me know your thoughts in the comments below. As always, this is for entertainment only and not financial advice. Make sure your investments align with your own goals and risk tolerance. Thank you for watching, and until next time, stay consistent and let the power of compounding do the work. Happy investing, everyone!